Welcome everyone to 22 Minutes in Lending. I'm your host, Vince Passione. Our guest today is Rob Keatts, Executive Vice President and Chief Strategy Officer at Chartway Federal Credit Union. With over 2 decades of experience in strategy and technology within financial services and healthcare, Rob has been instrumental in shaping Chartway's strategic direction since joining in 2016, overseeing everything from IT modernization to enterprise-wide transformation initiatives. Rob, thank you for joining us on 22 Minutes in Lending.
My pleasure. Thank you for having me.
Awesome. So, Rob, let's just start off. Size of the credit union, field of membership, where it has offices. Be great to just get a background for our listeners.
Sure. So we are just over 3 billion in assets,
Congrats.
headquartered in Virginia Beach. We have offices in the Hampton Roads area of Virginia, so southeastern Virginia, Houston, Texas, and the state of Utah, both north and southern Utah. And obviously, Texas and Utah came through acquisitions from years ago.
Clearly, big concern about just the industry in whole and the survival of smaller credit unions.
Mhm.
So let's start there.
Sure.
Um, how does Chartway help smaller credit unions survive? Is that part of what you believe is a strategy for Chartway is to help the smaller credit unions that are important to your existence or not?
Yes, and so part of it is part of it is we have talked to other credit unions around merger and acquisition. If they're not able to survive, let's partner and do it together.
Hmm.
Um, we also partner with smaller credit unions that are just let's share ideas. And it's interesting. It's not always like we're the ones with the ideas. There's some small credit unions out there with amazing ideas. There's $100 million credit union local or near us that we talk to on a regular basis that they're doing some incredible things. And we're like, can you teach us how to do some of what you're doing? And so I think the credit union industry as a whole, that willingness to collaborate um, is part of what is going to help smaller credit unions survive longer. Because I do think that as an organization or as an industry, we really do want to make sure that we don't get down to 5 credit unions. That doesn't help
Sure.
anybody. And so the more we can keep smaller credit unions healthy, the better. Um, at the same time, we want to make sure that if mergers need to happen, we want them to happen before a credit union gets to the point that the NCUA is taking them over. So um, it's kind of a yes and.
I was looking at your some background on the credit union. I was looking at your 5300 report. Let's start off with the investments in branch. So what's behind that? I mean, this is a time when most people are talking about being digital first, but as we said in the opening, a $25 million investment in branch infrastructure. So what's the thinking there?
Yeah, so that's a multi-year strategy around both opening a few new branches as well as renovating existing ones. And we believe digital first. We are definitely putting a lot of money on our digital side, but we don't think the branches are going away. When COVID hit, everything went digital. And since we've opened back up, we're actually at and above transactions in branches from where we were pre-COVID. And so we don't see it going away. We do see it changing. And that's part of the investment we're making, either as we're building new branches or renovating existing. We really are designing them so that in the future, they're not just for cashing a check, but they really are there for having conversations and doing education of our members on the needs of their financial life. And so that's part of what we're doing is it really is kind of a restructuring of our branches so that they can support our members' needs today, as well as what we think it's going to be 5, 10 years from now. We truly believe that we need to have physical presence in the communities that we serve. Um, if nothing else, it's a marketing piece where people see our name more often.
Sure, it's a billboard.
But people do like to know that when they have that complex question, they want to be able to come in, sit down, and have a face-to-face conversation. And we want to make sure that we are close when they want to have that conversation because we do think that's a need for people. And I think it is Gen Z and millennial. I think it's older as well. We
Mhm.
still see the same thing of
Sure.
people have a complex question or there's fraud on their account or those kind of things where they're just unsecure. They want that face-to-face communication.
No, makes sense. So branch infrastructure is expensive between the infrastructure itself, rent, and then turning around and having people in the branch. How do you measure return on that? Is it just about the experience or is it looking at product penetration? Are you looking at traffic?
Yes, yes, and yes. It really depends. Honestly, it really depends on the branch. We have branches that we have in areas that we specifically look at the branch as it's gonna bring in deposits. We have branches where we say it's going to be a heavy loan branch. We have some branches that are heavy because of education for the community around them. And so anytime we open or remodel a branch, we really look at that branch, the expectations of that branch, and build out a pro forma around what we would want to see coming out of in order to say it was successful what we did. But it's no two branches are alike, and so it's not like a cookie cutter formula. It really depends on who the members are around the branch and what our expectations are for that branch.
And Rob, you touched on deposits, and I throw in there right new members. There's been a lot of concern around deposit betas. It's
Yes.
affected the industry, not just credit unions, community banks, banks as well. How do you see the branch commitment contributing to getting those deposits? I mean, there's lots of debate about are deposit franchises a thing of the
Right.
past?
Yeah, I mean, I think we're at a point in the industry now where we need to source deposits wherever we can get them. And so there's definitely a digital play around deposits. We do believe there's a physical play around deposits. We have members that have money to bring into the credit union, but they want that face to face. They want that banker experience to come in and have a conversation around where to deposit their money, what should they keep in their accounts, what should they invest. And so between our branches and our investment organization, I think those two combined really are kind of leading that physical charge. And we do believe there's the right place to have a branch where we can bring in deposits because it is physically in that location.
So we talked about this prior to starting to record about your commitment to Latino communities, and we had Victor Coro on from Coopera on a prior episode, and he had talked about serving Latino communities is essential to credit union survival, but Victor kind of suggests that it's not really common practice. So what's motivating Chartway? How did it become a priority?
Yeah, so yeah, Victor and Compare are really good friends of ours. We do a lot of work with Victor. We started probably 3 or 4 years ago, really seeing and hearing from our team members on the ground out in Utah, the need for more services in the Hispanic community. The more of our members coming in, were speaking Spanish. And so we really decided to take a look at it. And our typical start for everything is data. What is the data telling us? And so we partnered with Victor and Coopera actually to really look at our data to understand our markets, understand the demographics in our markets. And sure enough, that's exactly what we saw in Utah was a significant increase, growing population of Hispanic members. And then we started looking at other financial institutions and didn't see anyone that truly was out there in the market serving all the needs. And so that's just kind of, how we do things is we look at it, we say, there's a need in our community. How do we help? And we partnered with Victor, worked with Inclusiv, another organization as well, and really started down the journey of getting our Juntos Avanzamos designation to ensure that we were able to truly serve that membership. But it's just, we saw it as a need in the community that we could help with.
It was interesting when I was chatting with Victor because you kind of think about, oh, Hispanic community, there must be some special products and services, but this is really serving a lot of these communities that they're multi-generational.
Yes.
It's everything from wealth management, trust. This is not CDFI. This is looking at a community of individuals who've been here, done well, and are looking for access to financial services, broader financial services. Is that the focus for you?
Absolutely. I mean, we position things differently, but we have not created any new products. The products we have serve our members. It's just a different set of members. We do a lot of I-10 lending, both auto loans as well as mortgages in Utah, but it's our same product. We just accept an I-10 number instead of a social security number. We don't charge huge fees. We don't charge different interest rates. It's the same products. It's just a different community that needs access to them. And we've said we don't see the risk in using I-10 instead of social. And so we've been able to serve the community well, and we haven't had to create new products. same financial needs.
Okay. Now, Rob, let's go back to Juntos Avanzamos. That's an inclusive program.
Yes.
What's required to be in the program?
Um, a lot. Um, so
Okay.
it was quite a few months of work to make sure that they want to make sure that people are truly serving the Hispanic market and not just saying they are. And so it's making sure that you have team members that are trained in bilingual, making sure you have the right documents that are translated, making sure your products do have certain functionality. And like I said, ours already did. We didn't have to change products. But there is a lot to make sure that everything you're doing when someone walks into a branch that has a Juntos Avanzamos designation, they know they will be served. They will see their language. They'll be able to speak to someone in their language and have their needs met. And so it's a pretty extensive list of things that you have to meet. And like I said, I think we were probably 8 months from start to when we actually were able to get our designation.
So it's not just language, it's also culture, right?
Absolutely.
And how much of that is retraining existing branch members versus recruiting folks from within the community?
Um, it's probably 50-50. When we started, a lot of it was retraining existing team members. We have through the data that we were able to get through Coopera, we have two of our branches in Utah where over 50% of our membership is Hispanic walking in the door.
Hmm.
And so we really looked at how do we start moving around some of our bilingual team members so that we could get those branches at 100% bilingual.
So talk about measurement. So how do you measure success here?
It's um it's interesting. So we're working on that right now. So every year we go through a process with Coopera where they do a deep dive into our data and let us know how we are doing from both a growth of the Hispanic community as members, as well as the depth. How many products are they truly taking advantage of everything that we have. We do that on an annual basis today because we don't keep that data in-house on demographics inside of our
Right.
data warehouse. We're actually having conversations with a couple of other organizations to where we can start doing that on a monthly basis because we really are seeing from an annual standpoint, I mean, last year we grew almost 30% in the Hispanic market in Utah. And so really we want to be able to measure that much more in depthly. We're a big data-driven organization. And so only being able to get that data once a year is kind of makes us itchy. And so we're having conversations where we can get that on a much more frequent basis. But the other side of it really is what we're being able to do in the community and what the community is telling us. So, and there's a lot of organizations coming to us to say, can you help us? Because we've heard that you're in here, you're serving the community well. And so that's one of the measures for us, absolutely, is that we have people coming to us, not the other way around. And that's truly telling us that we're doing the right thing. We've got the word of mouth in the community that we are there to help.
Great. So let's switch gears. Business banking. You started in 2024. So tell us about the strategy behind it. What do you hope to gain by getting into business banking?
Very similar to kind of how it happened on the Hispanic market. We really started looking at the data. We were getting more and more members coming in and opening a business account, which is really just a consumer account, but it's for their one person business. We saw the need in the community. We heard it from the Hispanic community that there was a lot of small businesses that weren't able to get financial services. And so we said, okay, we think there's a play here. There's a gap that we can fill. And so we started up our process of building out business banking. We, in the next month or so, will have everything launched for full service, small and medium sized businesses. And we really think that there's a real need for business banking at lower fees, higher rates for returns, especially in some of the underserved markets.
And talk to us a little about the technology innovation. What are you doing to support business banking?
So we are a Q2 is our consumer digital banking, and they have a business banking platform. So we're in the process of implementing all of that right now. Next month, all of that will be live. And so really it is partnering with our already existing partners to be able to support the needs from a technology standpoint And then we spent the last probably 8, 9 months building out the products on the back end, from checking, savings, lending products to support the needs.
Okay. So let's talk about fintech. So you joined the organization as a CIO. Now you oversee the strategy. It's not a common career path, but I was a CIO once too, and wound up where I am. So I think there are lots of turns you can take in leveraging technology. But
Yes.
what was behind Chartway's decision to do this? Was this we're really committed to technology and it needs to be embedded in our strategy? We're tech first. Talk about that.
Yeah, I think it's probably both ways. I think as an organization, we recognize the need for technology, we recognize the need for digital, and digital first. I think there's also a piece of it that strategy is just something I've always been part of. What I've done as a CIO has always been around the strategy side. And so I think it was a nice fit for
Mhm.
me. But we're an organization that believes that we've got to understand the digital needs of our members, because like we were talking about earlier, from a millennial, the Gen Z and on, everyday banking is going to be on their phone, not at a branch. They want a branch. They'll come into the branch when they have a complex question, but their bank branch is their phone. And
Mhm.
so we've got to be able to keep up with the Chases, the Capital Ones of the world that are putting $500 million into R&D. We'll never be able to reach that kind of investment. So partnering with fintechs, understanding who's out there and how we should be integrating with them, is how we're going to be able to kind of keep up as an industry.
Now, when you talk about investments, are you investing directly in fintechs? Are you part of the Circle Fund? Are you part of Reseda? How do you do that?
We are. So we have a QSO that we started to do investments in fintechs. I'm the president of the QSO also. And we do both direct investments into fintechs, as well as we are an investor in Circle Fund 2 as well, from a diversification standpoint.
And by doing that, tell me successes and tell me where you've had challenges.
Yeah, the success is, the reason we do it is we start with the organizations we invest in are fintechs that either Chartway is using or we want to use. And the difference there really is resource allocation. We can't spin up everything as quickly as we want.
Mhm.
Um, but really, we look at it from the standpoint of, we want to make sure that the companies that we're investing our energy into, that we believe are going to help our members, that they continue to thrive and grow and be innovative. And for a startup, that means capital. And so if we can put some of the capital in that helps them continue to innovate, then it's a win-win for both them as well as us. And it does give us the ability to have some input on direction. So a lot of the fintechs we invest in, they will ask us, "Kate, can we talk to your team about X, Y, and Z thing we're thinking about? Were you willing to beta a product for us?" And so it does give us the ability to kind of help the direction of the company we're using, and make sure that they can continue to grow and innovate. That's really our philosophy.
Now, Rob, what about AI and credit decisioning? Lots of conversations about bias. We had the CEO of Fair Play on, where he talked about his product and how it can sort of detect bias. And, his assessment is that most of the training data today that's being used to train algorithms, it's got bias in it already. He went so far as to say we should probably use ethnicity and age because it's already in the algorithm. So what are
Right.
your thoughts there?
Um, I think AI trained, machine learning trained models for credit underwriting are a must. Um, FICO doesn't cut it anymore from a credit union standpoint, in my opinion. We say no too often um, to the demographic, to the members we're supposed to be serving, which is the underserved. So for Chartway, our model actually goes live next month, and we're hoping somewhere in the neighborhood of about a 30% lift in yeses
Wow.
um, through doing it that way. And is there bias? There's inherent bias in everything. We train the model, lock it down, test it for bias. Once we are comfortable with it, we then put it in production. And unlike other AI, it doesn't learn as it goes. That's the model for a period of time. And then we will train a new model, lock it down, check it for bias, put it into production. So that's really how we look at it. How most of the industry looks at it is you don't let the model learn as it goes. You train it, and then that's what it's doing, and that way you make sure it doesn't pick up new biases that you're not aware of as it moves forward. And that's what we'll be doing starting next month. Excited about it.
Now, delinquencies, we're certainly talking around the different CEOs at the show, big concern about the spike, especially in auto, the 2020 and 2021 vintage, really not good for credit unions. Largest part of your portfolio is used and then new auto.
Yeah.
Can you opine a little bit on your experience, what's happened to you, your delinquency rates, and then what do you think the longer term outlook is?
Yeah, I mean, yeah, 2020, 2021, auto, as well as unsecured personal loans, just those vintages have been rough. We have actually seen them starting to plateau, which we're really happy about. So our delinquencies definitely were up towards the end of last year. They've been trending down for the first 3 months of this year, and we see them continuing to trend down. 23, 24 vintages are doing really well, and the 2021s are starting to plateau off. So throughout our entire autos, cards, pretty much the bulk of our portfolio, we're not seeing anything increasing right now. Everything is either stable or coming down. What that'll look like tomorrow, it's so hard to tell because of everything going on in the economy.
Sure. Well, lastly, given the uncertain times, what do you think are the key things that credit unions should be thinking about as a financial partner or provider with their members that they serve?
Um, Really, it's keeping in mind why we exist. I mean, we really are here to serve the underserved, and how do we make sure that we are continuing to do that with all the economic uncertainties? Um, Someone who isn't considered underserved today might be tomorrow, depending on what happens with their futures and their financial futures. And I really think the country needs credit unions more today than it ever has. And I think we need to be able to stay true to our roots. How do we make sure that we're using data and we're using technology so that we can serve in a manner that is prudent the people that need serving in our communities? And that's the beauty of having 4,000 plus credit unions around the nation, is there's a credit union in every community. And I think we all need to make sure that no one's being left behind from a financial standpoint.
No, that's great. Well, Rob, we're going to leave it there. So that wraps up this episode with 22 Minutes in Lending. Big thank you to you, Rob, for joining us and sharing your insights. Don't forget to subscribe so you never miss an episode, and we'll see you back here at our next 22 Minutes in Lending. Thanks again, Rob.
My pleasure. Thanks for having me.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.